Well, thank you, John. Let me say that I'm very happy to be participating once again at the Economist Conference and in such a distinguished panel. I will try not to repeat some of the things that have already been said. I'll just say that for businesses, this has been a particularly tough period, a period of extreme uncertainty. And obviously, different businesses have been affected in a different way. I mean, we carried out as PwC a few months ago an impact assessment focused on Cyprus, and it was clear there that different sectors, for example, the hospitality and leisure, would have a different sort of impact compared to the health sector. At the same time, even within specific sectors, there are differences. So shops operating in malls have been affected in a different way from retailers that have managed to go online. So what I would say is that the business level, the name of the game at the moment is still building scenarios and getting ready to face the situation as it's unfolding. But at the same time, businesses should be getting ready for the day after. And I believe that what this pandemic has led to is an acceleration of many of the trends that existed before. The disruption of globalization, the digital revolution, and the emergence of the importance of data and of intangibles in the economy, as well as the forces of inequality in society. And what this economic crisis will leave us with is high levels of debt, even higher than before, and a low interest rate environment. So in this context, businesses should build more sustainable business models aligned with these trends, taking advantage to the greater extent possible of the next generation EU and the EU recovery funding in the spaces of digital and the green economy. And this is relevant, obviously, for new emerging sectors, and is relevant also for traditional sectors. And just to make my point more real, I would just mention the real estate sector, a very traditional sector in Cyprus. Just a few days ago, we published our half-yearly review, and we included their recommendations for the refocus in that sector. For example, focusing on demographic trends, housing for the elderly, focusing on social trends, affordable housing for young couples and young families, refurbishing and remodeling existing buildings to be aligned with the new demands in terms of the environment and the green economy, and a number of other recommendations, including the digitization of the land registry and all the real estate transactions in Cyprus, and the creation of a leases registry that will bring transparency and better allocation of capital for investors. So these reforms and this refocus is applicable for existing sectors, but also it will facilitate new sectors to emerge. And I will conclude by saying that we shouldn't miss this opportunity as a country to go down the path of reforms. I mean, this is not the time for quick and easy solutions to fix the problems that have been created in the economy by the pandemic. This is the time to move in the direction of sustainability. We need public sector reform. We need digital transformation in the public sector that will help alleviate bureaucracy. We need a greener economy, and definitely something that I mentioned in previous years, we need a reform of our educational system and of our justice system. And these are changes that will drive competitiveness, they will drive productivity, they will help existing sectors, but they will also importantly help the creation and the emergence of new economic sectors, leading to a more diversified economy. In conclusion, I would say that the public support to businesses obviously is welcome, and it was the right thing to do. But going forward, it needs to be focused. It needs to be specific and driven to specific sectors. And we shouldn't lose sight of the fact that as a country, we need to maintain our investment grade rating going forward for a number of reasons, including safeguarding the banking sector, which is important for the economy. So once again, thank you, John.